Myself Nazia Hasan. I'm an assistant professor at TMIMT Tirthankar Mahavir University, Moradabad. In the previous session, we discussed what is cost sheet and what are the basic components of a cost sheet. We covered all the theoretical aspects related to the cost sheet. But for the major understanding and for the clear-cut understanding of a cost sheet, it's extremely necessary that we should understand it with the help of some numerical. So in this particular session, we will be covering some numerical aspects related to cost sheet, and we will understand how to prepare the cost sheet of an organization. In the previous session, we learned what is prime cost, what is factory cost, what is cost of production, what is total cost. Now taking on first numerical, you can see on the screen, calculate raw material consumed. In the previous session, we discussed that when we start making the cost sheet, the first thing which we have to calculate is to calculate the raw material consumed. We learned the formula for calculating the raw material consumed, that is direct material is equal to opening stock of raw materials plus purchases plus expenses on purchases minus closing stock of raw material. Similar formula we will implement over here. The information given in the question, as you can see, opening stock rupees 18,000, purchase of raw material rupees 2,30,000, carriage inward rupees 27,000, sale of raw material scrap rupees 8,000, closing stock of raw material rupees 20,000. With the given information, we will calculate raw material consumed. So first of all, we will write opening stock, which is rupees 18,000. Next is purchase of raw material. We will add purchase of raw material in opening stock, which is of rupees 2,30,000. Then we will add carriage inward, which is of rupees 27,000 given in the question. Then we will deduct sale of raw material scrap from the value, which is rupees 8,000. Again, we will deduct closing stock of raw material of value rupees 20,000. After doing adjustments, we will get the final value raw material consumed, that is rupees 2,47,000. So opening stock 18,000 plus add purchase of raw material rupees 2,30,000 plus add carriage inward rupees 27,000. After doing these addition, then we will deduct these values 8,000 and rupees 20,000 from this, and we will get the final value, that is material consumed rupees 2,47,000. So this is how we calculate the raw material consumed. Now next, going to another level, we will prepare a cost sheet. What is cost sheet? We all know. Cost sheet is an addition of different values, prime cost plus factory cost plus cost of production, plus then we finally arrive at total cost. Similar statement we will apply over here and get the final value of total cost of sales. So first of all, see how we actually prepare the format of a cost sheet. Cost sheet for the year ending 31st March 2010. First of all, we need to be very clear that for which year we are preparing the cost sheet. Here we have mentioned we are preparing the cost sheet for the year 31st March 2010. It is very important to understand this concept, because on the basis of this mentioned year, we will analyze what is the opening stock and what is the closing stock. Then we will prepare the format. as we have discussed, particulars, amount, and total amount. Amount, individual amount we will write in this column, and the total of the major headings or major components we will show in this particular column, so that the person has more clarity while he is going through or she is going through a cost sheet. Now, first is purchase of materials. So, as we all know, while we are preparing the cost sheet, first we have to calculate the prime cost. And for calculating prime cost, we need to add direct material plus direct labor plus direct expenses. Direct material, we have, as given in the question, is not directly given in the question. We have to calculate the value of material consumed or direct material. For that purpose, we will write opening stock. We will go through the equation as we have already seen in the previous session. Direct material opening stock plus purchases plus expenses on purchases and closing stock of raw material. First of all, we will write the value of our opening stock of raw material. Year ending is 31st March 2010. And stock of material, naturally, then the stock of material given for the year 1st April 2009 will be the opening stock, which is given for rupees 28,000. Next is, we will add purchases. Purchases are given for the value 5,35,000. 5,35,000. Yes. Then if see up another expenses related to purchases are given in the question. Yes, there is carriage inward. We will add carriage inward, which is of value 18,300, as you can see in the question. 18,300. Next is, after carriage inward, I think there are no other expenses which are related to your purchase of raw material. Now this value, from this value we will deduct closing stock. Closing stock is of 31st March 2010. So this stock will be considered as a closing stock, which is of value 32,500. Finally, after adjusting this value, we will add this value, addition, and deducting the value of closing stock. Then we will be arriving at final value of material consumed, which is rupees 5,48,800. Speed. $5,48,800. Next is, this is direct material value. Next is the manufacturing wages. Manufacturing wages are also known as direct wages. We will show up them up over here. Next are your chargeable expenses. Chargeable expenses, as we have discussed in the previous session, are your direct expenses, which is rupees 53,000. And after adding all these expenses, direct material, direct labor, and direct wages, we will be arriving at a value of prime cost, which is 8,86,800. So we have done our first job of calculating prime cost. we have calculated the value of material consumed. Then we have added manufacturing wages, 2,85,000. Then we have added chargeable expenses in that, 53,000. And finally, we have arrived at a value of rupees 8,86,000 of prime cost. Next is, after prime cost, we will add factory overheads. Let's revert back to the previous session. We have discussed that in prime cost, we need to add factory overheads for calculating the factory cost. So here we start. We will add factory overheads. Factory overheads, we have discussed in the previous session that factory overheads are related to the production of the product, which are incurred on the factory floor of any manufacturing concern, are included under the heading factory overheads. So first expense will be of indirect material, which is of rupees 21,000 given in the question itself, as you can see. Next is your indirect wages. Indirect wages are given in the question, 42,700. Direct wages, we have used them for calculating the prime cost, but remaining indirect wages we will use in calculating the factory cost. So please remember these basic points. All direct expenses in your prime cost, and after that all indirect expenses under different headings. After that, your internal transport. Internal transport in your question is specifically given, please see, is related to factory, which is rupees 27,500. 27,500. After internal transport, we have drawing office expenses. Sometimes we tend to confuse that which expense to include under factory, which expense to include under office. So if it is, you can see, you have to study that drawing office expenses are basically paid to the engineers of a factory, so they will be included in a factory cost, that is rupees 25,500. After drawing office expenses, we have work manager salary. It is specifically given work manager salary. It has nothing to do with the office expenses, so we will include in factory overheads. It is rupees 30,000. Next is foreman salary. Foreman person, we already know it is associated with factory, so we will include this particular expense in your factory overheads. Next is depreciation, repairs and maintenance. Depreciation, repairs and maintenance, let's see how we have to show them. Depreciation of a factory building, as already given in the question, we will include under factory cost, and it is of rupees 24,500. So we will show them up over here, 24,500. Next is plant and machinery. We all know it's a parts of a factory, so we will include in your factory overheads. Next is motive power. Again, by name we can understood that it is related to factory, so it is 24,000. Next is cotton waste. Again, it is a part of a manufacturing process, so we will include it in a factory overheads. Next is oil and gas. We all know it is a part of a factory, so we will include it in a factory overhead. Next is managing director salary. See, there is certain calculation we need to do. Managing director salary is divided into different percentages. 40% is for factory, 30% is for office, and 30% is for selling. So 45 multiplied 40% of rupees 45,000 will be included in the factory, and 40% of 45,000 is rupees 18,000. You can calculate, so it will be included in a factory. Next is lighting factory. You can see, assume it by name, it is related to factory, so we will show it in a factory overheads. Next is consumable stores are also a part of your factory overheads, so we will include it in a. Next is, yes, sale of a scrap. Any scrap, as we have discussed in the previous session, any scrap has to be deducted in a heading under factory overheads. So in the question, it is given scrap value of rupees 2500. So we will deduct it from the overall total factory overheads. And after doing these adjustments, we will be finally arriving at a value of a factory cost, which is rupees 11,89,300. So by now we have a half job for preparation of a cost sheet is done. We have calculated prime cost. In prime cost, we have added all the factory overheads, indirect material, indirect wages, internal transport, drawing office, factory, plant and machinery. And after adding these factory overheads in prime cost, we will deduct a value of sale of scrap from this particular value, and finally we will be arriving at factory cost. Now after factory cost, next let us revert to the session. In factory cost, we need to add office and administrative overheads, then we will be arriving at a value of cost of production. So here we go, we will add office and administrative overheads. Office and administrative overheads are the overheads which are not incurred at the factory floor but are a part of administrative tasks of the manufacturing concern. So first is office salary. By name you can easily understood. Office salaries, which is given in the question. $57,600. 57,600. Next is printing and stationery, which is rupees 16,400. Next is office rent, rates and insurance, which is rupees 21,600. Next is director fees, which is included in salary. It is of 22,000. Next is depreciation, repairs and maintenance. Under this heading, we will include all the depreciations and repairs and maintenance which are done on office building or office furniture. It is of rupees 14,900. Next is managing director salary. As we have discussed, 30% to office. So 30% of 45,000, 13,500 will be included in office overheads. Next is lighting, which is related to office. It is specifically mentioned in the question, so we will include in office overheads. Next is cost of production. After addition of all these components, we will be finally arriving at cost of production 11,89,000, that is office factory cost. Adding all the office and administration overheads, then we will get the value of rupees 13,44,300, which is the cost of production. So again I summarize: prime cost plus factory overheads minus sale of scrap will give you factory cost, and after adding office and administration overheads in factory cost, you will get the cost of production. Now let us revert back to previous slides. After adding selling and distribution overheads, we will be arriving at total cost. So we will follow the same format. We will add all selling and distribution overheads to arrive at the total cost. Selling and distribution overheads are the overheads which are incurred while selling a product, marketing a product, or any kind of distribution expenses are included in office and administration overheads. So selling and distribution overheads, here we go. Let us see. First expenses, advertisement expenses. As you can, it is easily understood, it is related to selling of a product. Next is salesman salary. We all know it is given in the question. It is rupees 33,700. Next is your carriage outward, which is related to the selling and distribution overheads. It is 18,500. Next is warehouse expenses. It is again related to selling and distribution overheads, 19,500. Next is managing director salary. We have discussed that 30% will go to the selling. So 30% of 45,000 is again 13,500. It will be included in selling and distribution overheads. Next is free samples distributed. It is again a part of selling and distribution overheads. Next is packaging and forwarding expenses, again a part of selling and distribution overheads. Next is, after that, cost of production and addition of selling and distribution overheads will give you the final value, that is total cost or cost of sales, which is rupees 14,80,100. I repeat, after adding selling and distribution overheads to the cost of production, we will get the final value, cost of sales or total cost. Now, we have been given in the question sales. So we will be mentioning sales over here, which is 16,50,000. 16,50,000. Now, after deducting total cost and total cost from cost of sales, we will be arriving at a profit or a sales value. Here we are incurring profit because after deducting 14,80,100 from 16,50,000, we are getting a positive value. If the value would have been negative, if sales would have been less than the cost of sales, definitely the figure will be resulted will be a loss for the organization. Here we are earning profit of 1,69,900. So for a brief understanding, or in case if you have missed any points, I again summarize the preparation of a cost sheet. We will prepare a format like this: particulars, amount, total amount. First, we will calculate the value of a material consumed, as we have already discussed in the previous session. In material consumed, we will add manufacturing wages, chargeable expenses, which are again your direct expenses, and after adding these three values, material consumed, manufacturing wages and chargeable expenses, we will be arriving at a value of a prime cost. In prime cost, we need to add factory overheads for arriving at a value of factory cost or work cost. So in prime cost, we will add factory overheads, indirect material, indirect wages, internal transport, depreciation, factory building, and so on. We have already discussed. And if any value of sale of scrap is mentioned in the question, so definitely we will deduct this value and adjust this value. After adjusting this value, we will be arriving at a value of a factory cost, which is rupees 11,89,300. Now, in factory cost, we will add office and administration overheads, and after adding administration and overheads, office and administration overheads to factory cost, we will be arriving at a value of a cost of a production, which is 13,44,300. In cost of production, we will add selling and distribution overheads. Selling and distribution overheads are the expenses, as we have discussed, related to the sales of a product, advertisement, salesman salary, and so on. We have already discussed. We will add these selling and distribution overheads to the cost of production, and we will be arriving at a value of a total cost or a cost of sales. Now, total cost of a cost of sales. If sales is given, we will deduct this total cost or cost of sales from sales value. and we will be arriving at a profit for the organization, that is 1,69,900. It is not necessary the value is always coming positive. Sometimes total value of total cost is higher and value of sales is lower. So in that particular case, it's quite understood there will be a loss for the manufacturing concern. So we will mention the loss. We will mention the loss for that particular concern if sales value is less and total cost is higher. So by now I think you must be clear that how to prepare a cost sheet, and thank you so much for attending.